Good day, everyone, and thanks for joining us here in the charge. Tune into the market-based edition. Fellow competitive speaking, Sndl needs a revisit. I'm sure the thumbnail suggests some sort of cross in the markets, and we're going to revisit that to make sure that everything looks fine, or if it looks fine. So yeah, just gather around, loyal family. Welcome back. If you're new here, consider joining the family as we covered Sndl quite extensively. Let's yeah, guys, it looks interesting. So let's go ahead and dive right into the charts here, shall we? All right, so today's April the 20th, 2021, and the previous close of Sndl is going to be 84 cents. It closed negative, approximately 10.4% for the day. Okay. All right, guys, welcome back. ASMR, interesting analysis. So here we are once again. Let me just pull up the lines here. That's it, super simple. Ladies and gentlemen, you guys are looking at the same lines we've been following, so we keep it simple. Don't overcomplicate it. The financial support line. The market is taking place below the financial support line. That's number one. Not ideal, okay? Price activity taking place below that level. Interesting observation number two. The $1 psychological levels right here at this red line, okay? The price activity is taking place below that line as well. And last but not least, we'll make this a short video. Drum roll, please. The 50 if you're new here, we've been taking a look at the 50 exponential moving average and the 200 exponential moving average to see whether or not they're crossed up or down. And when you cross down, that's a death cross. And ladies and gentlemen, I would like to present to you all right now in the Sndl market, we have officially had a death cross. Yeah, unfortunately. Now this is so somebody say, okay, dude, what does this mean? Speak English. Okay, well, I'm speaking English first and foremost, but the death cross simply means that the sellers realize that they have an opportunity to regain their overall control in this market, which Sndl, if you're kind of new here, Sndl is in an overall downtrend. I can just kind of back out so that we can just kind of make sure that we're all on the same page. I know, guys, you guys hate when I go over this all the time. But it's been, it's been walking down the stairs ever since back in August 2019, approximately. It is in an overall downtrend, okay? Walking down the stairs, making lower lows, making lower highs, okay? Sndl is fresh out of a technical uptrend. This is all pending, right? Like, I realize that even though I'm saying that the death cross has happened, it's below $1, it's below the financial support line. That's a lot. That's a lot against the market right now. So yeah, it's going to be interesting to see how this plays out. But this is not like a doomsday video. This is simply stating that the sellers appear to have a very unique opportunity to continue the overall trend. If the market is below 98 cents, we've been saying that forever. You guys know that. If it's below 98 cents, then the sellers, they're going to regain their overall control in this market as they have had control forever. Okay, so 98 cents is the level, like, $1 approximately. If it just kind of starts consolidating below that $1 level, then the sellers may have to go ahead and push the price down. You already have the seller's obligation level. Hopefully you have that. Let me just put that on the chart again so that we're all on the same page with that. The seller's obligation, if the market is below $1, the seller's obligation is to get down to that, the green line I just put right there. And this level is going to be at 51 cents. So if the sellers cannot get to that level, then it's a waiting game for the buyers to consolidate in preparation to crank the price back to the upside. It's super simple, guys. That's what we look for. Remember, I don't pay attention to the news. I mean, if it's associated with news, that's cool. But remember, I'm looking at buyers and sellers. So let's just say, for instance, that the buyers, they're fighting, right? They're fighting below this $1 level. Because remember, on the channel, we look for higher highs and higher lows to verify an uptrend. And I just made a high, second high. And of course, this explosion is the third high. And then now the market is looking for a higher low. This could take a substantial amount of time. This could take place over the next week and explode. How likely is that? I don't think that's likely. I mean, I need at least another 72 hours in order for me to determine whether or not there will be an explosion in this market. So hopefully we'll give you guys an update in terms of what I'm seeing in the charts in order to see an explosion in this market. So far, I'm not seeing it. That could change in 72 hours. Let's let this play out. But as I was just explaining, the buyers and the sellers have obligations. If I'm explaining to you that the 51 cent just below the price is the seller's obligation, this means the sellers have the price below 98 cents, yes? And if the sellers have the price below 98 cents, this means that they have an obligation now to continue the momentum to the downside. So if the sellers do not continue the momentum to the downside, as their obligation suggests that's what they need to do, if the price activity is taking place below 98 cents, this means that the buyers will be in this market taking some time to consolidate below the $1 level, if that makes sense. Because again, the sellers have an obligation. If they're below a 98 cents, and yeah, they have to break the price down to show strength. Once they break the price, if the sellers break the price down below 51 cents, this would show the markets that the sellers have strength. And once the market has seen that the sellers have strength, this would be an indication that the sellers are simply going to continue their overall trend to the downside. Okay, but again, they must get the price below 51 cents. But in the bullish case, that the buyers are simply, you know, they're consolidating, getting better prices down below the $1 level. Okay, this consolidation will take place. It'll be some sort of sideways consolidating, maybe even a little bit lower, some sort of cuppage formation, one way or the other. However long it takes, this would be an indication to me in my book, the way that I understand candlesticks and charts. Okay, I could be inaccurate about this, but it's simply a consolidative phase before the next move up, whether it's an explosion or a walk up the stairs. I'd rather see the walking up the stairs, because those are the sustainable structural foundations that are built in the price action in order for it to be a healthy, again, sustainable move if the market moves to the upside, when it eventually finishes consolidating below the $1 level and above the 51 cent level. So hopefully that makes sense. So if you notice, the price is kind of going sideways below $1, maybe breaking down to 86 cents as it's close to that level now, maybe getting even a little bit lower. The obligation is still the same for the sellers. They must break down below 51 cents in order to show strength. If there's sideways consolidating going on in the markets in between well above 51 cents and below 98 cents, that's an indication that the buyers are potentially taking a lengthy amount of time to consolidate in preparation to move the markets higher. Okay, super simple, guys. And the buyer's obligation is the same as well. They must make a higher high. This stuff is simple, guys. Come on. It's just really simple. All you're looking for is higher highs and higher lows, and find out where the buyer's obligation is and the seller's obligation. So let's close this out. And one last time, I know I repeat myself a lot, guys. The true buyer's obligation is to make a new high. That level hasn't changed. It's at about $1.75. That's why I was saying, like, how likely is it for it to like explode and go up to $1.75? I don't know. Let's let the markets decide how likely that is. I'm going to say that it's probably in the best interest for the markets to have a lengthy sideways consolidation before an aggressive move up. Okay, but that's just what I like to see, and that's what I understand in terms of the candlesticks and the structure and the price action. So don't go by what I'd like to see. Just simply do your research, enter, exit the markets. I'm not sure if this is a scam. I got to get some disclaimers out of the way. Please execute your strategy. Don't listen to me. This isn't financial advice, please. Okay. And I think we covered everything, guys. And most importantly, that the death cross has happened. It is official on the daily. So let's revisit this at some other time. Okay, you have the range, the current range. You have the buyer's obligation to make a higher high, but the current range that I'll leave you guys out with is going to be it's going to be the same, 51 cents all the way up to 98 cents. So the long-term investors, of course, this is kind of where you would understand. I mean, like how much you would deploy in this market. I can't tell you, what to do, right? But this is your area where you kind of, gather up your nest or your stocks. You get to build your position, right? So that's the range, and you have the seller's obligation, 51 cents. If it can't get below there, then you know what's going on. Okay, hopefully this was useful. Leave an appropriate thumb just below the video there if you enjoyed the content, if this was useful information. Okay, and also, if you're new, before you go, we covered the alternative markets. If you're into Bitcoin and altcoins, we cover that. So subscribe, hit the bell, and we'll send you that when it is available. So remember, guys, take care of yourselves. This price action stuff, it's super simple. Okay, just look at your charts. You'll understand higher highs, higher lows, ranges. And buyers and sellers obligation. I love it, and it's super simple. Okay, it's break it down in a practical view, and I think it'll make a lot more sense the more you look at price action. Okay, so take care. We're gonna talk soon, and bye for now.